many people in the room actually work in the insurance industry? Okay. I did a presentation like this in Germany a couple months ago at DataWorks Summit. And unfortunately, there were very few insurance companies, but the room was full. And I go, how many people work in the insurance industry in this room? And 2 raised their hand. And I go, why is everybody in this room? And I'm like the last person, up for the day. And I go, why is everybody in this room? And they go, we thought it looked like an interesting topic. So hopefully I'll fulfill that. I will let you know I'm a business person, an analytics person. So I'm not going to be talking about Hive, Pig, Spark, or any of those things. I'm going to be talking about business use cases, what I'm seeing working with our insurance companies in the insurance industry, kind of around, I don't know if it's really a new concept, but it's something that's starting to kind of catch hold. We talk about IoT in the insurance industry, but sometimes I think when we talk about IoT in the insurance industry, it's for the wrong purposes. It's kind of like for that customer wow factor and so forth. So I'm going to put this in the context of kind of like business value. So on that, I think, yesterday we had different things on the keynote and so forth. Fundamentally, I think where we are from a technology age is we're really in that age of data discovery, data exploration, and how can we actually leverage big data and analytics. The challenge I see in the industry breakfast this morning, we were talking about the different types of use cases. And there's different types of analytics and so forth. And as an industry, we're still very much attached to reporting. And reporting, in my view, is kind of like I'm looking in the rearview mirror. Something's already happened. Because if it's showing up on, you can still have a real-time dashboard. But the hands in the room, I think we had just a couple of organizations that are actually looking at premium calculations on a daily basis. It's still 30 days. And I know when I was a CFO, it took us 45 days to close our books. So I'm going, okay, this report, anything on here is at least 60 days old. So you're going, okay, I'm driving my car and I'm like looking in the rearview mirror, which is good, but what's happening in front of me? And so the context of this is kind of like, let's think about risk listening. Let's think about how we can, leverage data, leverage more of the real-time information. So as we look at what's going on around us, and as an insurance industry, our risks are changing because things that we insure are changing and evolving. Technology has impacted that. We've got, smart cities, smart buildings, connected lives, connected health. We're also looking at kind of a sharing economy. What's a sharing economy do to a traditional type of insurance policy? How do I actually need to look at, you think about getting in the Uber, you get in the Lyft, you look at an Airbnb. When do you flip your policy on to be a commercial policy to be a personal policy? And if you're not in the insurance industry, you're going, well, what's that actually mean? Well, you rate and you evaluate the policy and the risk differently. And so you shouldn't pay the same type of premium because, if I'm, an Airbnb and I've got somebody living in my home, they actually destroy it while they're there. And if I don't have a kind of a commercial policy and I've got other people that are in there and the intended purpose is not a primary dwelling for me, the nature of the risk and what it says on your insurance policy isn't valid. So how do I be able to turn things on, turn things off? The other aspect is, smart cities. We've got telematics. We've got, the smart homes. We're looking at different types of elements. It's not just for the cool factor. It's like, how can I actually leverage this technology to actually make things safer to live in and to hopefully drive down some of our loss ratios? So if you look about, and I'm just go ahead and build this out. If you look at what's going on in the industry, and I grew up in rural America, and I know things are happening, but we're, as a society, a lot of population is actually moving towards, cities. By 2050, the mobile world is actually looking at 70% of all world's population will live in cities, which is a little bit different than where we are today. We're looking at, smart cities with the types of the risks that are there. I think one of the elements, and there was something on the keynote this morning, but connected vehicles, if we look at the amount of sheer data, 300 terabytes of data per year or 25 gigabytes per hour. And I think we're even, some of the projections I saw on some of the other presenters is they think it's even going to be higher. So, can we use this as an industry to help us from a risk and an underwriting perspective? The other aspect is, from a cyber perspective, you look at certain types of insurance policies where I'm insuring a factory and somebody takes over a cyber threat or makes a cyber threat on an IoT device that's in a building. Under a traditional insurance policy, you would think that would be covered under a property risk. But that event actually happened because there was a cyber threat on a device, and we've seen this happen already where cyber attacks will go in, and we've seen a couple of buildings actually get blown up. So, how does that impact, the insurance? So we have to understand, capture that type of information. The smart cities, I've already talked a little bit about that, but smart technologies, what we've seen with the Geneva Association in making Las Vegas a safer city, reducing number of pedestrian accidents. You're seeing the city of Las Vegas come together with Daimler Chrysler, sensors. You're seeing information coming from, walking or looking at pedestrians, and there's also a reinsurer that was involved in this. But just looking at how do we evolve the risk, all types of data. So if we look at that, it's not working.
It's rubbing on your hair. If you could turn that.
Oh, now I'm really mic'd up.
There you go.
Okay. So if you look at the types of data that we've got in the industry, it kind of goes across all aspects from a risk to underwriting to usage-based insurance to claims to new product development to CRM. We've got data sources that are, sorry, I'm just going to hold this. From driving data to weather information to claims notes and diary to drones, the imagery. You've got catastrophic events, you've got seismic data that's coming from NOAA, from USGS.gov. We've got biometric data, working with some work comp companies right now that are actually, collecting that type of data for, overall, workplace safety programs. Looking at chatbots, all new types of data. And what's interesting about this data is it's also highly unstructured. So in an industry that's very prone to kind of our structured type data, how do I look and evaluate, these new data sources? So if I look across where the opportunities are, and we've seen different elements within the industry. The insurance industry is really looking at data granularity. So how do I get, better access to some of that unstructured data? The secondary data access, it's the geocoding, it's the link analysis, it's the behavioral, it's environmental type data. We've got open data sets from, USGS.gov. I've got, digital information. But really what's interesting is kind of what we're starting to see happen from a real-time risk analysis perspective. So I'm looking at maybe some streaming type information, and how do I bring that in? So, an industry that's, I'd actually say it's probably the oldest industry there is because it's well over 500 years old. But how do we actually, leverage these new types of information and data sets? So I think as we look at, the concept of risk listening, and you look at the different types of analytical type approaches that we can do, we've got reporting, you've got predictive analytics. The insurance industry, we've been doing predictive analytics for, a number of years. That's fundamentally what we do. But we've also got discovery and learning. But when I talk about risk listening, it's, how can I use new data sources to actually look at monitoring risk? Can I actually use this information to help me prevent losses? So now we're actually looking at how do I bring, any type of data, look at it maybe in a real-time perspective to actually look at preventing losses and monitoring my risk portfolio. So I'm going to focus a little bit on what are some of the use cases. And some of you I've in the audience I've met, so some of you have seen some of these slides, so I apologize for some elements. But from a geospatial perspective, we can use it both from a changing of the risk, the changing of the environment information. We're seeing organizations use geospatial information to help us identify underpenetrated regions. So when I mean that from an underpenetrated region, is there areas of opportunity? Is there areas of growth where new risks are taking place? You've got changes in the population. You've got changes in new businesses. How can I use that geospatial information? Compare that information against real-time events. So you look at weather, you look at natural disasters, and then you also look at how can I use geospatial to compare and contrast certain types of data as it relates to maybe an account view versus a policy view versus location. So really kind of helping us look at a risk aggregation perspective. I think one of the most interesting ones that I'm starting to see happen in both the personal lines and commercial lines insurance is leveraging more real-time weather event information, because I know some people may think that climate change is not happening, but the models that we see are really outdated. The industry, we used to use 50, 100, 300, 500 year models to actually help us predict different types of weather patterns and so forth. A lot of those models are outdated, and it's difficult now to prevent loss. So what we're actually seeing is leveraging more real-time information. So whether it's as it's happening or maybe a couple of hours after, is organizations that are pulling data from NOAA, which if you're not it's the national, God, I'm not going to remember stands for. But anyways, thank you. It's 5 o'clock and my brain went dead. So there's that. There's USGS.gov. I used to work for a carrier where we wrote a lot of earthquake or difference in conditions. Leveraging that USGS.gov data for what are the real-time earthquakes? Where's that happening? Where's they also produce, where are the amount of the rainfall, the precipitation? Do we have drier conditions? Is that elevating the risk? And then also we're seeing companies pull in maybe some drone data to say, have people, if it's dry, have people actually been trimming some of the fire hazard type information. But fundamentally around the immediate event type information is actually being able to take your current policy information, overlay that with the data from NOAA or USGS.gov, also overlaying that with some geospatial. In this particular case, we're working with Pitney Bowes on that actual analysis. And being able to evaluate that and to simulate and say, as we're looking at specific events that have happened and we see claim activity that's coming in, and people are saying, well, I had, X amount of, potential hail damage, it damaged my roof. And you're sitting there going, you can use this in a couple of different ways to actually help you estimate your losses so you can get your financial results, but also where should I be sending my claim resources, out and saying, this one's a potential, higher loss. So really kind of starting to emulate, what's going on from a first notice of loss perspective. And then also in certain aspects, looking at both the hard and the soft fraud that could actually happen or evolve. The other aspect from a real-time information, and there's a couple of insurance companies that are really moving towards, have been in the usage-based insurance, been in telematics, they've been involved in collecting certain types of information about mileage, your driving behavior, the braking, the acceleration. But now as we look at the connected vehicles is now how do I actually pull that information to actually make for safer roads? Can I provide for alternate safer routes? And this type of situation is happening both with a couple of carriers in North America, but then also quite a bit of activity going on in both a few insurance companies. Ping An in China is actually doing some things with their telematic program around real-time contextual data, interacting with the car manufacturers. But really it's like, how can I influence that, the ability to manage how you drive. So can I look at the context? Can I offer up, safer driving routes? And I'll touch on this. So leveraging, kind of like looking at that customer interaction, the customer experience, to actually offer up the opportunity for safer routes. So we'll see certain organizations leveraging more the real-time data, where you actually driving, being able to do concierge service. So as an insurance industry, how do we stay sticky? Because as consumers, how often do we actually interact with our customers? So from a personal lines automotive or even a business line, enhanced telematics programs allow us to remain sticky with our insureds. But we can also leverage the data for looking at accident-prone highways, looking at driver behavior, being able to offer some safer driving routes, based upon your past behavior. And then also you think about the connected car programs. If I get in a vehicle and I might know my pattern is typically I go, from downtown Kansas City to Overland Park, Kansas, and you can tell where I live. And I see, right now there's actually an accident that's on I-35. I may actually say, you know what, it's better if you just stay on that route, or your insurance company or the car manufacturing offering up, are there alternatives, and is that actually going to make you a safer driver today? The other aspect is, from a product liability perspective, is being able to leverage, the claim data, being able to look at, claim speed and accident speed. And on the accident investigation, I'm actually seeing more activity happen, less in the United States, there's a little bit, but in Asia, and then also in certain areas within Europe. From a risk property perspective, and you can say this is maybe static type information, but one of the challenges I see as an insurance industry is we're making investments in leveraging drone and information, but a lot of times that data is not going into a data lake. We're not being able to look at it from a historical perspective. We're looking at it as, drone as a service type offerings, and the data is there just for the underwriter to look at. But what am I going to do with this information and do with this data over time? So you look at what we're seeing in agricultural insurance, being able to look at crop insurance monitoring, actually looking at the verification of claims. So some interesting things around the usage of drones. This is actually regardless of IoT or anything else, this is actually an example of an insurance company that said, you know what, and they insured the biomed industry, and they're looking for early loss indicators or large loss indicators, and there wasn't really any type of data sources that they could use and so forth. So they said, we're just getting started from a big data perspective. So they said, let's start to look at, are there different types of data sources that we can use? And so they're actually, in 2016, they started a small pilot program and said, let's start to look at our most high-risk customers and analyzing both the news feeds, looking at the customers' website, looking at data from the FDA, looking at clinical trial information, and really they're looking and trying to evaluate this information to look for loss indicators. So, is there a product liability issue or a product liability claim that they're going to have to pay out on? Do they need to be properly reserving? But what was interesting is as they started to collect this data, they also said, this is pretty interesting, let's expand this. And they went to their top 1,000 customers and started monitoring this type of information for those. And what they found out is, in addition to being able to get early loss indicators, it was also giving them additional risk information. So now in 2017, they actually have developed a predictive model off of this, both the real-time as well as the historical information, because there was no other data set that they either had internally or that they could actually purchase. And they're actually have helped them identify the high-risk attributes, and then now when the application comes in, they can actually auto-decline if a broker submits. And they're like, it's not within our risk appetite because we know enough about this customer that we don't want to spend the underwriting dollars on that. So actually, this is kind kind of a non-traditional like risk monitoring perspective. This actually comes from an insurance company that's in the Netherlands, working with one of our partners. And they're looking at both their telematics information in a couple of different folds. They're actually looking at both the roadway information, where people are driving. If you look down in the lower right-hand corner, they're actually attributing some of the driving behavior. They're actually looking where people are driving. They're using kind of a word wall graph database to actually help them understand the various attributes of where people are driving, what type of interactions that they're having, and this is data that's actually coming from the telematics device. They're actually also, looking at dash cam view information, and they're also looking at, overall roadway surface conditions. This other company, they also did not have an actual telematics program, and they did not think a telematics program was going to be eventful. So in the Netherlands, they actually publish all type of public accident information. So they're actually taking the public accident information along with some of their car cam information. They're actually being able to look at this and to, what are the driving patterns that are actually going on in the city of Amsterdam, where the high concentration, what type of vehicles, and I'm sorry, some of this stuff is in Dutch, but what are the driving speeds, how far were people apart from each other, what type of vehicles were involved, the age groups, and what they actually found is on roadway, I think it's C28, is actually the most accident-prone highway in the city of Amsterdam, all just from public information. The other aspect, and this was actually working with a reinsurance company, probably more the advanced analytics, but last year with Hurricane Harvey was there both public available data, and then they are also using drone information to actually help them assess the actual event within the city of Houston. So what they did is they were taking in both the satellite information, they looked at post-event analysis, they also brought in what were the water levels, pre and post storm. They looked at the GPS locations. They pulled in, helicopter, plane information, and drone information, and actually used more of kind of an AI machine learning on the different attributes within Houston to actually evaluate before Hurricane Harvey. This was the actual evaluation. We've got some post-event type imagery over in the upper top. They're actually looking at the different clustering of where things happen. They were also pulling in the different water sensors, looking at the surges, and being able to start to look at where some of their potential high risk, high loss areas were. Now, granted, it was a pretty intense event. So one of the areas, I think as we look at different types of data that we have and where can we use machine learning and just different types of use cases as company gets started, is we have the opportunity to look at new data sources and new types of analytics. And when I think of risk listening and where does it actually fit, it's really an opportunity for some of those new analytical applications. As an industry, we're still many times focused down in our IT optimization, but we've got the opportunity to look at more real-time data to actually help us from an overall loss prevention as well as risk monitoring. So as that, how do you think about this in the context of your company? I think going forward, start to think about your data slightly different. We've been pretty good at looking at our dimensional batch, kind of the data we use from a kind of a reporting perspective. But within your company, start to think about the data that we have that might be that semi-structured data, what might actually be the real-time information, what might be that behavioral data, and start to think about, here's, those in the green, this is data that we're maybe using today. The areas in number 2, it's probably that unstructured data that's sitting in our content management systems. But as we look forward, I think our data sources are really going to start growing in the more the unstructured and more the real time. So you think about the social media, you think about the chat bots, you think about drone feeds, you think about sensors, maybe some of our deposition recordings, our call detailed records, some of our just application, our photos. Actually working with an insurance company right now in Japan that we've got their photos is at the time of the accident actually capturing the event information and then being able to do loss settlement very quickly. Well, not very quickly, but being able to evaluate the amount of the loss. Is it a total loss? Do they need to send adjusters out? I know we've got certain organizations in the U.S. that are already doing some of this thing, but from in the Japanese market, it's very, it hasn't been as prevalent as what we've started to see in the U.S. So kind of like how do we look, how do we get prepared, and so forth. And I think the area of opportunity for our industry is to start to think about what are some of the emerging tech. And as many insurance companies from a business perspective, we're making investments in maybe not the latest greatest, but that insure technology, and how's that impact kind of your data lake and so forth, is make sure that when we make investments in the insure tech, how do I pull that data back into the data lake? Let's not try to create another data pond, and that's one of the challenges I see as an overall industry. Also start to evaluate and understand, what's going on from maybe some of the smart city. What are some of the data sources that are out there from the smart city projects, the different analytical capabilities, working with your partners, looking at, transportation type data sources, and so forth. And would love to stay in contact with people. I'm pretty passionate about what we can do from a risk listening, risk monitoring perspective, just on the different types of data sources. And on that, I'm going to end early unless there's any questions. Is this interesting? You think we'll ever get there as an industry? Toby's like, I don't know.
Yeah. Brick and mortar is going to be around for a long time. InsurTech.
Yeah.
You look at what Root, you look at Lemonade, you look at their loss ratios. And although they are disrupting the industry,
Right.
brick and mortar's not totally scared yet because they're just getting destroyed with losses right now.
Yeah.
So until that changes.
Yeah, and it's interesting. I know, everybody thought, well, Google was going to try to do some things, here in the U.S. market and so forth. Amazon's actually hiring insurance people in Europe right now. So that one's going to be an interesting one to watch. But the European, insurance markets, got some subtle differences than the U.S. market, especially like in the UK. I'm just amazed at and they've got so much fraud in the UK market, just by, we think about comparative raters and so forth. In the UK, for the auto insurance, you have to be able to respond probably in about a period of 7 seconds on what your actual rate is to an applicant. Otherwise, it moves on. And I was just like 7 seconds, and that just amazes me. And we've got one insurance company, they get, and they're about 750 million pounds. They get 5,000 applications every hour, just being able to respond. And then they're going, okay, and then they're trying to constantly check, the data coming back and forth. And that's been an interesting use case to work with them, because that blew up their traditional EDW. Trying to do that just doesn't work. So that's all I've got. So give you a little more time. Thank you for listening, especially at the end of the day.